Hi, this is Patrick Henry, the CEO of QuestFusion with the Real Deal What Matters. I'm here today with JD Davids. JD has recently started a consulting company after many years of being a startup CFO and board member and board advisor. So I'm really excited to introduce JD to our audience because we do a lot of things that are very complementary with each other, and we see a significant opportunity to collaborate together with mutual clients. So thanks, welcome to The Real Deal What Matters.
Thanks for having me, Patrick.
You bet. Tell us a little bit about your background, about yourself, and what got you into doing what you're doing now.
Sure. Well, I love working with entrepreneurs. I'm a serial entrepreneur myself. I've had the privilege of serving on the management teams of 8 different startup companies.
Wow.
3 of those companies completed successful IPOs. 3 of them were acquired, and the other 2 were learning opportunities.
Okay.
But I've been fortunate enough to have completed over $1 billion in financial transactions. That includes raising money from angel investors, venture capital firms, strategic corporate investors, and doing mergers and acquisitions, both on the buy side and on the sell side.
Okay.
Yeah.
Were you ever a founder of one of these companies?
I was, yeah.
Okay.
Deal Management Systems was a software company that I founded.
Okay.
And it was an online deal room in 1998 before they had online deal rooms.
Oh, cool. That's awesome.
Yeah. And I also like to make a shout out to the veteran entrepreneurs out there. I was fortunate enough to serve 4 years in the United States Marine Corps, and so
awesome.
Veteran entrepreneurs is a big movement now, and I always like to give a special shout out to those guys.
Oh, that's awesome. Well, tell us a little bit about Fronis Group. That's your new company, and what you do, and your focus, and
Sure.
where you're taking it.
Yeah. So Fronis Group accelerates fundraising for startups.
Okay.
In a nutshell. And we do this in a number of ways. We provide online workshops, in-person workshops, and we have speaking opportunities and some services that we provide as well. But the primary thing that we really focus on is helping them identify the right investors and getting them in the deal as quickly as possible.
Okay, interesting. You mentioned in your marketing materials smart money fundraising. I did a blog piece a while ago about myths and realities of venture capital raises, and dumb money versus smart money.
Right.
But walk me through what that means. Smart money fundraising, and how do you identify smart money to bring into your deal?
Right. So smart money, which is the title of the book that I'm publishing right now,
Okay.
is all about getting the right investors in your deal at the right time of the company's development.
Okay.
And what we see with entrepreneurs, and I'm sure that you see this all the time too, is that a lot of entrepreneurs tend to use the shotgun approach to fundraising.
Yeah.
And it's a colossal waste of time for both the entrepreneur and the angel investor.
Yeah.
And what we focus on is not necessarily finding people that are geographically desirable for your business, but what makes success, and after 23 years and $1 billion in deals, what I find is the ones that are successful are the ones that bring investors that have vertical domain expertise to the table.
Okay.
That those people can add a lot more. They can literally catapult your business from here to here in a very short period of time. You can go get investors that don't have domain expertise, but in my experience, and I'm sure in yours as well, in many cases that actually slows the entrepreneur down.
Yeah, I definitely have had that experience, and yeah, one of the key things I focus on with the entrepreneurs and startup CEOs I work with is, first off, waiting as long as you possibly can before bringing in purely financial investors into your deal.
Right.
Whether it be with strategics or strategic partners, or crowdfunding, or finding some source of revenue where you don't have to give away equity, even small business loans, because
Right.
it definitely changes the dynamic once you bring other people on board. But it can be in a positive way if you do get the smart money on board. So I agree with you on that. How large is the market for services like Fronis Group?
Sure. So the Global Entrepreneurship Center estimates there's about 50 million new businesses created every year worldwide. And a fairly large chunk of them at some point in their development is going to need to raise some sort of outside financing in order to help scale their growth.
Okay.
So it's a pretty big market. We also know that assets, that venture capital as an asset class has about close to 200 million in assets under management. There are 6,000 venture capital professionals that manage that money, and there's 265,000 active angel investors in the United States alone, according to the Halo report. So to answer your question in a nutshell, it's a big market. There's a lot of people that need.
So 200 million seems low for venture capital.
I'm sorry, 200 billion.
Oh, 200 billion. Okay, that makes more sense. Yeah, that's
a 200 billion.
That's a big number. Okay.
Exactly.
And do you know any statistics about like the 50 million, new startups every year? How many of those are more kind of cash flow lifestyle businesses versus companies that were like the companies that we either started or worked for that ultimately had an exit strategy either through mergers and acquisitions or taking the company public?
I don't know what the breakout is. That it's the 50 million new businesses a year is just a statistic that I got from the Global Entrepreneurship Center.
Okay, great. So let's kind of talk a little bit about the competitive nature of this business, which I believe, because I'm doing similar things, a little bit different niche than what you're focused on.
Right.
But it seems like there's a new internet-based executive coach every day.
Right.
What do you see as your competitive advantage? What differentiates J.D. Davids and the Fronis group from all these other folks that are out there, because it is a very noisy, kind of crowded space.
Sure.
With, in my belief, a lot of charlatans out there that really, don't have very much to offer, but seem to have, a good ability to brand.
Sure, absolutely. Well, at the Fronis Group, we don't actually provide executive coaching services.
Okay.
We provide a lot of workshops. We provide a lot of educational opportunities. We have working sessions where we show entrepreneurs how to do the work themselves. Because as you know, particularly for early stage entrepreneurs, raising money is something that the founders of the company really have to do a lot of.
Yeah.
And we provide what I call sort of Sherpa services. Like, if you're going to go climb Mount Everest, for example, right?
Mm-hmm.
You're going to read all the best books out there. You're going to buy all the best equipment. But when you get to the base of the mountain and get ready to climb, the first thing you do is hire a Sherpa.
Yeah.
Why? Because that guy goes up and down that mountain every single week.
Yeah.
He knows how to read the wind direction and the weather changes. He'll tell you, put your ladder over here and not over here because 3 people died last week on that crevasse over there.
Yeah.
So we provide some free training. We provide some paid workshops. Maybe I'll take on 4 or 5 different clients, but my focus is really to reach a much wider audience, to show them how to do it themselves. And our real focus is putting together a target list. If you want to raise money for your startup and you want to get those vertical experts that can bring introductions and industry expertise that, to catapult you to that next level, it's just like anything else, sales 101, right?
Yeah.
Build a list and work the list.
Yeah.
And we show them how to do that.
Okay, awesome. Do you need to raise capital to grow your business? I guess another way to put this, is this more of a kind of cash flow lifestyle business? Maybe it could be a great lifestyle business, or is it something that you eventually see raising money and kind of building this into something bigger that you sell to a bigger training organization?
I'm writing some checks right now for audio and video production.
Sure.
And I'm writing some checks for people that are helping publish the book.
Yeah.
But the example that I always like to point to is TechCrunch. So everybody's familiar with TechCrunch. Michael Arrington started that back in the day, and it was a 2-person blog.
Yeah.
He was an attorney at Wilson Sonsini. He was an entrepreneur himself.
Yeah.
But he basically quit his job at Wilson Sonsini to start a 2-person blog. And he pretty much just ran around Silicon Valley and interviewed people that he knew.
Yeah.
Well, now TechCrunch has 35 million monthly visitors to the website, right? They put on big conferences in New York City, San Francisco, London, Beijing, China. So that's a pretty good cash flowing business.
Absolutely.
He sold the company to AOL for a reported number around $40 million.
Okay.
Pretty nice lifestyle.
Yeah.
And now, Michael Arrington was named as one of the 100 most influential people in the world by Time Magazine.
Interesting.
And now he's got his own venture fund called Crunch Fund.
Okay.
And he's a limited partner in Andreessen Horowitz and Benchmark. So for a guy that started with a 2-person blog, that's pretty good.
That's outstanding. We all aspire towards that.
Absolutely. Yeah, right.
So tell me something about yourself that people don't know.
That's a good one. I think the one thing that a lot of people don't know about me is that my favorite passion is actually racing sailboats.
Okay.
And I'm primarily on 30 or 40-foot boats right now, where you've got a crew of around 8 people
Okay.
to race the boat effectively. And I just love being on the water, for one.
Yeah.
But secondly, racing sailboats is very intellectually and physically challenging, and it's a team sport.
Yeah.
Right? So you're constantly looking at how many different things can you tweak in order to make the boat go faster. And my preference is to do what you call one design races,
Okay.
which means that the boat and the equipment are essentially identical. So
Okay.
it's all about crew and tactics.
Okay.
So you're constantly watching the wind shifts, the wind speeds, you know, how fast you're going through the water, tacking angles. You're
Yeah.
watching your competitors, and if they make a mistake, you got to react and consolidate those gains pretty quickly. So honestly, I think sailboat racing is a lot like doing a startup.
Yeah.
Right? There's always little things that are shifting.
Yeah.
You have to react. You're relying on your team members to do it right, because when you're tacking that big spinnaker sail from
Yeah.
one side to the other, 8 people all got to be doing the right thing.
Yeah.
And so you're constantly in communication. So there's a lot of similarities between that, and plus I just love being on the water because it's just good for my soul.
That's awesome. Is there anything that I neglected to ask you about, whether it's about the Fronis group or your view on kind of what's going on in tech and the startup world?
Sure. Well, I think there's a couple of things. First of all, I think that early stage investing is evolving.
Yeah, no doubt.
So it used to be that a venture fund was 100 million, and they do seed deals and startup deals.
Yeah.
But now most of the funds are $1 billion or more, and they continue. It's like you're consolidating. The winners are consolidating larger pools of capital,
Yeah.
which means in the early stage there's sort of this vacuum. But now that vacuum is creating new opportunities, right?
Yeah.
So now you've got micro VC funds, you've got 500 startups, you got first round capital, you got all those folks. There's always individual angels and angel groups that are doing deals. One of my favorite things to point to now is AngelList. I think Naval Ravikant has done something very interesting, particularly with the advent of the Jobs Act, where you can actually talk about early stage deals in public if you do the right filing.
Yeah.
And so I think that opens it up. So what used to be, well, we're going to try to raise $500,000, and so we're going to go to the local country club and try to soft circle a deal.
Yeah.
It's unusual for you to successfully attract smart money in those types of deals. And I'm not knocking that at all. I mean, there's some really brilliant, very successful, very wealthy people that do a great job. But
Yeah.
there's no substitute for having somebody with cash in your deal that has already sold or taken a company public in your vertical market.
Yeah.
You can't replace that.
Yeah.
And so that's the first thing, is how early stage investing is evolving.
Okay.
The second thing is that I just love working with entrepreneurs, because I think they're some of the most brilliant problem solvers
Yeah.
in the world. And you and I are both serial entrepreneurs.
Yeah.
And once you sort of have that illness,
Yeah.
you can't, it's a disease that you can't get out of, right? It's like the Hotel California. You can check
Yeah.
in, but you can't leave.
Yeah, absolutely.
But I think it's a lot of fun. And particularly, I think there's a lot of, technical founders or people that are really primarily focused on the product and
Yeah.
the customers.
Yeah.
And I think guys like you and I can come alongside them to be that Sherpa, if
Yeah.
you will, to walk with them up that mountain and
Yeah.
help them, it's like we can tee up the ball, but they got to hit it for 18 holes, right?
Yeah. Yeah.
And I think that's a lot of fun. And that's why I think there's a lot of opportunities for folks like you and I to help technical founders through a process that they may not have been through before.
Yeah, I agree. I mean, there's so many elements of building and running a business that, including all the things in terms of dealing with boards of directors and fundraising while you're still trying to run the company. It's a challenging job, and that's part of the fun of it too. So I know a lot of technical founders want to continue to be the CEO, but having somebody to help guide them through the process at a minimum can make them more efficient.
Right.
But maybe even would be the difference between the deal working and the deal not working. So
Absolutely.
yeah, I think there's definitely an opportunity there for both of us.
And I think that's a really good point, because fundraising, you and I know, it's a full-time job.
It's
right? And you raise 18 months of cash, and in 2 months you got to start raising the next round.
Yeah.
You're always selling the company. And I think a lot of technical founders grossly underestimate the amount of time that that's going to take on their calendar.
Well, and the time that it takes away from running the business is probably the most crucial time in kind of genesis and evolution of a company.
Right.
Because if you're pre-product, pre-revenue, the key thing you really need to be focused on is getting that product working, getting that product in customers' hands, getting your first revenue.
Right.
And if you're spending all your time raising money, it's a difficult trade-off. So anything that can make that more efficient, I think, is definitely beneficial for entrepreneurs.
And that's what we're doing with the Smart Money Startups Workshop. It's free, and our primary goal is to help accelerate that process so that they can be more efficient, right? To your point, right? Yeah. Entrepreneurs and founders have got to balance their time between building the product, interacting with customers, and raising money.
Yeah.
So to your point, anything that we can do to help them accelerate and not work harder, but work smarter when it comes to fundraising. Yeah. And that's what the Smart Money Workshops is really designed to do, is to help them be more effective and more efficient. Because, you and I have both been doing this for many years, right? And after doing $1 billion worth of deals, it's a process that you can actually repeat. It's actually, it's difficult. Yeah. But at the same time, there's a formula that you do over and over again. Yeah. And like I said before, the whole thing is build a list and work the list. Yeah. And the Smart Money Startups Workshop shows people how to build their list in an intelligent way so they don't waste a bunch of time pitching people that really don't understand their business and are probably just going to kick the tires for 6 months and never write a check anyway.
Yeah. So how do people get a hold of you or sign up for your workshops?
Sure, absolutely. So you can register for the free webinar, which we have about twice a month at smartmoneystartups.com. And you can also look me up on Twitter, which is @jdavids. And you can email me anytime at jd@fronisgroup.com.
It's been a real pleasure having you on here today. I'm definitely going to tune into the Smart Money Workshop because I'm super curious now, kind of where you're leading these folks, and it's been a real pleasure. So thanks for taking the time to do this.
I appreciate you having me, Patrick. Really do.
You bet. This is Patrick Henry, CEO of QuestFusion, with the real deal, what matters.